Stellar, XLM, lumens, lots of different names, lots of different price predictions. In today's video, we're going to be taking a look at Stellar from a technical analysis standpoint, and I'm going to be sharing my Stellar XLM price prediction for 2025. There's a lot of speculation and lots of kind of numbers being thrown around out on the wider internet across various different social media platforms. So I wanted to spend a little bit of time today to kind of show my, at least what I believe, more realistic price predictions for Stellar's XLM. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe, and let's go ahead and take a look at what's going on with XLM. Okay guys, we're going to kick things off right on the daily time frame. In fact, we're probably not going to leave the daily time frame for this. We're just going to stay right here. What we're going to do is we're going to take a look at past movements of price action and be predictive using various tools to where we think things could go in 2025. Now, we're going to use two main tools. We're going to use Fibonacci retracement, which is built directly into TradingView. That's this tool right here, okay? And we're going to use Elliott Wave. Now, the Fibonacci retracement tools are basically areas, or it's going to have the frequencies where price will gravitate towards and you'll see a reaction. The reaction is obviously through sentiment. Typically, when price moves to a certain level, people typically feel that they need to buy or they feel like they need to sell. That's really what the Fibonacci does, right? It kind of shows you these psychological levels where people feel that things are overpriced or oversold based on these frequencies. There are several different areas and numbers that I've linked in here, so that you can pause the screen, take a look at these and kind of copy them if you want. These are the levels that I would be using. Now, because my charts are on logarithmic, my Fibonacci levels are also based on log scale. That's this little tick box down here. If I didn't have this box ticked, my numbers look very different, okay? Because I'm using log scale on the chart, we must use the Fibonacci on log scale, otherwise you just don't get the correct readings. For reference, this is what it would look like without log scale. It just looks very, very odd, very different. This is what it looks like with, okay? So that's what we're going to do. The other tool that we're going to use is Elliott Wave. Now, Elliott Wave is highly predictive in a liquid market. If a market is not liquid, you can't track the behaviors of buyers and sellers very well because you see too many spikes. However, in a highly liquid market, something like XLM here, we can be very predictive using Elliott Wave. Elliott Wave, like Fibonacci, uses psychology and behavior patterns to predict next movements. Unlike indicators only show you what's already happened. With Elliott Wave, we can actually be predictive over the future based on patterns and behaviors. So when we see people buying and selling in certain levels and certain structures that form within that, we can be predictive over what happens next based on the psychology behind it. Now, Elliott Wave is a very complex subject. I put together a whole course based on Elliott Wave so you can learn all of the ins and the outs, all of the rules behind it, and even how to implement it. But it does take a very long time to master. The course is available over at 𝗕𝗘𝗪𝗀𝗀school.com. I've linked it in the description, and I do run 50% off coupons from time to time, also linked in the description. So you go ahead and check it out if you're interested in understanding more about the psychology of why things move the way that they do. Okay, a lot of it is, of course, all driven from supply-demand, and we're talking about the demand and the supply elements within Elliott Wave. So these are the two tools that we're going to use to predict out where we think the future is going here when it comes to XLM. Okay, so the first thing we need to do is we need to understand what happened in the past, right? What happened previously, and is that likely to repeat itself? Well, taking a look at our structures here, we can see some really good things happening back in 2020 and 2021. Okay, so we did see a lot of growth here, okay, coming from the lows of March 2020 all the way up to those highs back in May of 2021. This was a 2,971 move, where we did see XLM move up to 79.85 cents. Since then, we obviously have had a bit of a pull to the downside. Okay, now taking a look at our structures here, we've had a pretty interesting move to the downside. Let me zoom back in and snap this to the correct wick. There we go. So this move to the downside did bottom out over here in December of 2022. I'm just going to go and check to make sure I get this on the correct wick. It should be this one right here. Let me just check. That is 706 and this one is 702. So 702 is the low. Okay, and that was the December 2022, 29th of December to be exact. It was a 91.21% move to the downside. Okay, so great run to the upside, big pull to the downside, and of course this now has set us up for the next move. Now I've been looking at XLM as this area down here for accumulation. Okay, so at the moment, at the point of recording today's video, we are still of course in some kind of bearish place. We are lower than the 200 daily EMA and all that kind of stuff. The current range of accumulation, or reaccumulation if you will, is sat basically between 7.12 and 8.34 cents. Okay, so this is going to be a good strong area for me in my opinion. You can see every time prices come here, it's rallied up significantly. Okay, so our price action is looking very interesting. So the next thing we want to kind of think about is price going to repeat itself, right? So this move that we saw, this 2,971% move, is very, very good. If I go ahead and measure out the distance here, measuring the swing high and the swing low on the Fibonacci retracement tool, we can see that we have retraced all the way down, not quite as low as the 0.236 just yet. That would be 5.84, and I don't suspect that we are likely to go as low as that, but I will move this over to our current swing low, which is 702. Okay, coming in here, and we have some key Fibonacci areas. I'm going to go ahead and just draw some lines on the chart here, some key numbers that we want to pull out and think about. The 786, this is at 10347. Okay, so I'm just going to go ahead and move this down to that particular level. I'm going to draw another line on the 702. Now the 702 is not technically a Fibonacci retracement number, but it is a number that Bitcoin resonates with, and if Bitcoin resonates with it, chances are many other cryptocurrencies will. That's currently sat at 77.63, so I'm going to go ahead and put a line right there as well. And then I'm going to do the next main resistances or support levels, which would be found at the 0.618. That is 58.24. Okay, these are three key areas that we want to focus in on when it comes to the price action, as well, of course, as this little range up here a little bit higher at $2.15.17. Okay, that there is basically going to be the low side, and then we have the higher range at 482.4. Okay, and I will try and adjust this so that it actually hits that exact number, because I know I am awful for moving my yellow boxes to the exact ranges. So I'm just going to make sure that is 82.4. It's going to be really quite tough, but I'm going to leave it right there. A little bit conservative, but that's fine. Okay, so there you have your Fibonacci levels, right? So I'm going to mark them and I'm going to leave those on the chart right there. Now, the importance of this is that we can see that the 0.618, the 0.702, and the 0.786, these are going to be key areas of resistance and support for XLM's price action. Okay, so as we start thinking about a potential three-wave move to the upside, a W, X, and Y, our target for that would be $2.15 to $4.82.4. But don't leave the video just yet, because there's no guarantee you actually go that high. This is the importance of the 0.618 and the 0.786. So if we take a look at this price action, we can see several interesting things. We can see areas of resistance and areas of support on this journey to the upside. It was very much a choppy market to the upside during 2020. Chances are we're going to do something very similar. So if we go ahead and take this particular area and we kind of think about what that might look like over from our existing kind of low points, well, we can see that we're not likely to reach those kind of low points, those high points that we were kind of talking about. Okay, so if history does repeat itself, and I'll go ahead and I'll move, for argument's sake, I'll move it over here so that we can kind of see the reversal from the market a little bit clearer. And if I zoom out of this, you can kind of see how the price action does find resistance here on these key areas. It's actually a little bit short of the 618. You can see we had a reaction to the downside. The same here on the 0.382, up. Then we pulled back. We rallied up towards the 618. We pulled back. We rallied up. Okay, this case the 702 pulled back towards the support of the 0.618. We rallied up to the 786. We fell back to the 702, and then we rallied up again to the 882. And you can see that one right there. I didn't mark this with a line. I'll go ahead and draw that in right here. You can see up to the 882, pull back, and then we rallied up a little bit more. We failed to reach obviously the 1-to-1 in regards to what the future looks like, but you can see how there's a really choppy market right in these key Fibonacci areas. That means that although there's potential here for XLM to perform well, as in $2 to $4 range, it's definitely a possible scenario. There are some interesting areas of resistance that we must acknowledge. Okay, so if we're going to be thinking about the dollar cost averaging strategy, right? We dollar cost average in these kind of low points. You buy here, you buy here, you buy this dip, you buy this dip, right? And you have an average buy. Well, you want to be thinking potentially about the same. You do an average sell. So you sell at the 618, you sell at the 702, you sell a little bit at the 786, you sell a little bit at the 882, and you leave a little bit in the bag just in case, of course, you hit $2 to $4. This allows you to kind of, let's say, hedge your bets, but dollar cost average out of the market in the same way that you would have dollar cost averaged into the market. So for the most part, this is at least in my opinion, a realistic price expectation for Stellar's XLM, based on past patterns and buying behaviors. We can see there is still a pretty decent potential for some good gains. Now, in terms of percentages from our existing 702 low, we could be looking for around 7x on towards that kind of 618. We would be looking for about a 10x onto the 702, about a 13x on the 786, and a 20x on the 882. If we did get up to $2, we're talking about close to 30x, and up to $4, we're talking about 66x's. Okay, so there's some pretty decent potential for XLM to do well, but we also want to be quite cautious and, apply a little bit more thought into dollar cost averaging out of the market in the way that we would have dollar cost averaged into the market. Yes, you would technically earn a little bit less by dollar cost averaging out, but it would at least lock in profits as we have that journey to the upside. So there you have it, my kind of realistic price expectations for XLM. What are yours? Let me know in the comments down below, or join us in our free Discord server and we can continue the conversations down there. If you've enjoyed this video, found it helpful in any way, smash that like button, subscribe to the channel, and stay updated with all of the news, technical analysis, and fundamental research that we do here at Cheeky Crypto. And if you guys haven't done so already, check this video out right here. It's not one that you should be missing out on.